Hi, this is Stephen here from Share Navigator with our option and future trade update for October the 16th. So we're going to start with our crude oil trade. So you can see here, this is a short put option that we did on the December crude oil futures contracts. So essentially what that means is we're selling an insurance policy on crude oil at the 55 strike here, with a view to take an assignment if crude oil prices did fall to 55. They're at 59 at the moment. So we got paid a premium of $487 a contract for agreeing to take assignment of this futures contract at the 55 strike. As it says, at 59 now, so we've nothing to do with that trade. We're in a small profit here of about $58 a contract. If crude oil remains above $55 between now and October the 29th, we will make $487 clear profit on that particular trade. So just a reminder, a put option that we sell is basically us underwriting or ensuring the value of the asset. In this case, the asset is the December futures contract. So nothing to do there. We're in fact lining up our second trade on that quite soon. So just overnight with news, President Trump hinted that India are going to stop buying crude oil from Russia as a kind of a trade agreement with the US. And oil futures have gone up on that news, but not by a lot, because we have the overhang of the China and US trade dispute, which more than likely is going to get resolved. But in the interim, oil might be a bit nervous about that. And of course, the US Energy Agency as well, that there's an oversupply of oil at this moment in time. And that's why prices are depressed here. So that's the reason why we're selling put options. We're giving ourselves this little bit of wiggle room for things to go wrong rather than buying the crude oil futures contract outright. Our second trade that we have on at the moment, that expires tomorrow, Friday, October the 17th. That was a short put on SPY. SPY is an exchange traded fund that tracks the S&P 500. We used the 620 strike. So the S&P 500 finished at about 6,600 yesterday. So this is pretty much a dead cert at this stage to expire worthless, and we will bag our full profit in this trade. At the moment, it's $224. But I'll just remind you, that was part of a three-legged trade. We had a bear put spread on at one stage as well, and we used this put option to finance that. So actually, our profit's going to be closer to $35. So with that in mind, I just thought we'd set up. We were looking at opening up another trade the other day. In hindsight, probably waited a little bit too long. So when volatility spiked, we looked at selling put options again on the S&P 500 out to the November 14th expiry, and we were looking down at the 620 strike. And at one stage, we were getting close to $600 a contract, but we decided to wait just in case there was follow through in terms of bad news after the bit of a spat between the US and China. Now, that never came to pass, and you can see the premiums have come in a bit. But it doesn't mean we're still not looking at this trade. We're just, I suppose, hoping for a couple of down days to get the premium up before we pull the trigger and press the button on that trade. So we're still lining up the S&P 500 trade, selling the put option for the 620. And for those of you who don't know, we're basically writing an insurance policy on SPY that's currently trading at 666, saying that, look, if on November the 14th it dropped to 620, we would actually take assignment to those shares and buy them. And because we're providing that a guarantee as such, we're getting paid a premium, which is $324 a contract. So just remember, option contracts usually are bundles of 100. One, if you see the quote here is 324, so you have to sell one contract, which will be $324. So that's what we're looking at the moment. We're still highlighting this trade, and we're considering a second crude oil trade, but that will be next week, and we'll just see where crude oil goes in the interim before then. Okay, this is Stephen with an update on our options and futures trade. Thanks and bye for now.